All right, we'll get started. So thanks for taking the time to join us for Connect's webinar on successfully navigating the waters of private lending. My name is Mike Saniga. I'm the VP of Operations here at Connect and moderator for this afternoon. I've been with Connect for almost a year now, and I've got to say I'm really excited to see how Connect has made doing business easier for mortgage professionals. Again, thank you for spending your time with us. We know you've got a million other things you could be doing right now. And we appreciate that you've decided to carve out some time for us. We're confident that it's going to be time well invested for you, and you're going to take away some nuggets of information to build your business as a mortgage professional. Now, today we're going to be talking about private lending, or alternative lending, as some people call it. Now, the idea of private lending either sounds really enticing for you or really scary for you. But either way, navigating those seas, those rough seas, is unpredictable at best. There's different processes, different rates, different fees, different terms, different expectations, really. And a lot of these deals that come across your desk are unique, tough deals. We're going to go through a couple of those today, but sometimes you really wonder whether it would just be easier to pass on these deals and move on. No wonder some agents call private lending the black hole of the household mortgage industry. But there are mortgage professionals doing private deals successfully. They consider private lending to be an opportunity to expand on their client base and, probably more importantly, drastically improve their margins. They're not the only ones who can profit from the space, you know. The question is, how can you profit in this space while feeling confident that you are getting the best deals for your client? So we are going to go through a few things today. We're going to break this into three parts. First, we're going to discuss the challenges with private or alternative lending. And there are differences to your core traditional business. We're going to show you how you can thrive in this space where you're able to work smarter, not harder. A world where you don't have to worry about the type of client that walks through your door, because getting that deal funded is going to be easy peasy. Then we're going to introduce you to Connect, a platform that will be a key part of this toolkit. We have everybody muted for this call. If you have questions during the session, please just use the chat function and send us a message. And as moderator, I'll be watching out for those questions and we'll get those answered right away. Now, I'm happy to introduce to you Cameron Brown, who is Connect's Vice President of Growth and Strategy, who's going to lead us in this discussion today. Cameron Brown is a mortgage broker with the Sherwood Mortgage Group in Toronto, where he focuses on the alternative space. Prior to joining Sherwood, he was the VP of Operations at WCL Capital, which operated a lender channel, We Can Lend, and a brokerage channel, Private Lend. While at WCL, he oversaw the origination of over $200 million in private deals between the lending and brokering arms. Needless to say, he knows his way around the alternative mortgage space. Besides mortgages, he's also a real estate investor with over 30 doors in his portfolio, and he's an OSC licensed private capital markets dealing representative, which enables him to offer his clients a variety of investment opportunities into different mix, development projects, and other private equity plays. Cam, I'll let you take it away.
Yeah, thanks, Mike. Glad to be here.
There's your picture. I didn't hit skip, so. All right. So why don't we talk first about the challenges of alternative lending?
Yeah, sure. I think it is an interesting time in the space and it's getting a lot more coverage. So it's an exciting time, but nevertheless, there's always going to be challenges. And I think right now, one of the biggest is just the huge amount of new entrants and new capital that's flowing into the space. The challenge with that is, who is the right lending partner for you in general, and then on any particular deal. So the last thing you want is to get a commitment signed only to find on closing that lender can't actually fund, or to get a call from your client a few months post-closing with some kind of horror story about how, an overly aggressive lender has been, just giving them a hard time for whatever reason. So, that's one big problem. I think, I'm getting calls all the time from, I won't say clients, but people that I, aren't in my network. And I think most brokers are getting these types of calls these days. In fact, I just had one this morning on my way over here, but people random people wanting to start investing in mortgages. So they might have 50 or 100 grand, and they want me to find a second for them to invest in, right? So
Wow.
That's not the type of deal that I've ever been able to or had any interest in doing, which is why I'm a licensed dealing rep, so I can actually try to channel those people into mix and whatnot. But in part that, it saves me having to do investor disclosures with these guys, and just makes my life on the compliance side a lot easier. But again, the fact that you've got more and more of these types of quote unquote lenders coming into the space, sort of a bit of a Wild West mentality, or at least, not necessarily aware of the proper ways to be doing things in the space. It just raises that issue of, who do you trust to work with? Who do you feel confident? Who do you feel comfortable putting your clients with? And that's for, your own sake as well as your clients, and the sake of growing your business over the long term.
Yeah, that's interesting, because the mortgage brokering industry is very highly regulated.
Mm-hmm.
And it's ironic that this private space is not very regulated. It feels, like you said, to the wild, wild west. How does, can you talk a bit about the transparency? Is there, how do clients know or mortgage brokers know that they're working with somebody that is trustworthy?
Yeah, it's a great question. I mean, I think on, to what I was speaking about with a lot of the new entrants into the space, if it's a Joe Smith or a Jane Doe type person with, 50K in RSP, they want to invest. I mean, I just won't work with those people in the first place. So to me, that challenge is kind of easily solved. But I know, it becomes a challenge trying to, there's a part of you that wants to satisfy them, and obviously you stand to make some money, but you also want to help, and you think, okay, well, this person wants to do 50K, and I'll probably have a client who wants to borrow 50K within a month or two. So then you're just kind of looking for you're looking for that peg to fit in that hole, and then you're kind of stringing along the investor on that side, and it may not be a perfect fit, but you're going to try and make it work just to double end a deal or something. I mean, again, that's just not something that I want to get involved with. I tend to work with, mix that, have been around for a little while and that I have a relationship with. And then a couple other sort of brokerage type lenders that, are pretty well established and I know have, deep enough pockets that if they issue paperwork, then it's, I'm going to be able to, they're going to be able to close the deal.
Yeah, I guess that is a challenge, right? Because you don't know even if you sign paperwork with somebody, it's possible that this could fall through if they don't have the money, or if they've bitten off more than they can chew.
Yeah, it definitely happens. And again, I mean, I think that kind of touches on another challenge in the space, which is managing the client's expectations, right? So, it's especially relevant today with, more and more bankable clients or previously bankable clients who are being forced into the either the B or the private space. So, when they get there, the rates and the fees can be a massive surprise, as you mentioned, not to mention things like having to pay for the lawyer or the lender's lawyer, right? So you're paying for two lawyers, and it's almost always the case that the lender's lawyer is more expensive than the client's lawyer. So
as they do.
That can be, there's some sticker shock there, and it's a pain for sure. But then beyond that, okay, you've got these very high rates that the person wasn't necessarily expecting, but then you can't really even say with any confidence what the going rate is for let's say a private second. You can say, yeah, it's 10 and 2 or it's 12 and 2 or something like that. But every deal is priced on a case by case basis. Mm-hmm. It's not like the A side where you get a rate sheet from a bank and you've got, okay, this is the 5-year fix, a 5-year variable. These are the rates. And if your deal fits in this broad basket of criteria, that's what you're going to get. It's, on the private side, if you get a rate sheet, it might be, starting at 8 and 1, but we all know that 8 and 1 on a second never actually happens. So, it's hard to know what the actual market is when you're kind of stuck in this way of interacting with lenders, where it's just very, very one directional. So you have to basically package the deal and go out and go to every individual lender, see what their pricing is, right? So it leaves you kind of open to shoppers, clients who are shopping you, because, how do they know that what you're offering is the best? If I do a month worth of legwork, which is a very long time, you don't want to be doing that. But if you did and you came back and said, okay, after a month I got you 10 and 2, they're still going to not be happy, and they're going to probably call another broker and say, look, this guy's offering me 10 and 2. All that guy needs to do is say, well, I'll do it for 10 and 1 3/4, right? And maybe they take a bit of a haircut on their fee, and you can lose the deal that way. So definitely a challenge, just managing those expectations. And I think some of the keys to dealing with those we'll touch on a little bit later, but you've got to be fast, you've got to have multiple options, and you've got to really communicate what those options are, how you arrived at them, and be able to convey that those options are actually representative of what the market is for this deal.
Right. So being fast and having options, those seem like diametrically opposed objectives.
Absolutely, yeah. Traditionally, I would say, getting those options is what the work is, right? That's what takes the time. At my, you mentioned previous company, WCL. We had a team of about 5 brokers, and we were doing 40 to 50 deals every month, and that would be every one of those deals would probably get sent to 4 or 5 different lenders to try to figure out where it was going to fit. So each one of those lender submissions was a separate email. So you're cutting and pasting, you're tweaking based on different lenders' kind of guidelines, and you're sending out these things. Then you're getting it all back on everyone's individual timeline, and then you're trying to, manage 5 different lenders' expectations as well as your clients, and then they're wondering, okay, what's going on with this deal? So it's just very labor intensive because there's so many people that you're talking to on any one deal, and so many different timelines at play, right? And then you've got to try to synthesize all that, communicate what's going on to the client, and it just becomes, I won't say messy, because there's ways that you can kind of, structure your process. But at the end of the day, you 5 different email threads on one deal is more than, I think, is 4 more than you should have. So.
Right. Well, and that's interesting because at WCL you're doing 40 to 50 a month. So presumably you would have had the lending network to sort of draw upon. So for people who are new to the industry or who are focused more on the traditional side, wouldn't have that broad base of lenders at their fingertips.
Yeah, absolutely. And I think that when I think back to when I was a first broker, I can remember the first 2 or 3 privates that I kind of got in my network, and I got them just by calling other brokers and asking around, and just, again, doing a lot of legwork. That was at a time where there wasn't as much demand, and so lenders were maybe a little bit more picky than they are today about who they worked with. So, in some cases I'd have to kind of, try to meet with them face to face and say, hey, look, I'm a good guy. Like, I'll send you good deals, blah, blah, blah. But again, it's very old school. It's I think very inefficient. Now you see a lot more ads in, CMP magazine or Mortgage Broker News, so you can find some of these larger groups. But again, it is still legwork.
Yeah, absolutely. Reminds me of the yellow pages of old.
Yeah, exactly. And then I think, again, just speaking of legwork, there's sort of one last thing that I'd probably mention as a challenge right now, or a looming challenge, and one that's sort of more structural, which is, there's this question about how we're actually going to be submitting private deals in the future. So, we've all seen the announcement from Filogix about potentially restricting the ability to download mortgage applications and credit bureaus, and that's historically how, we have been doing private deals. So, you create the app, pull the bureau, hopefully you have an appraisal. You take those 3 things, download them, put them in an email, send them out to this lender or that lender, and that's the way it works. If we can't download those things, are we stuck using Filogix and only the lenders that they have on their private side, which is growing? But again, there's a lot of questions about what that's going to look like, and what other alternatives are there out there. And that's kind of how I got involved with you guys in Connect. Right.
Huh. Very interesting. Okay. Well, let's talk about the, how do we turn this these looming rough seas into smooth sailing for brokers.
Mm-hmm. Mm-hmm. Yeah, I mean, I think it goes back to those problems that we just identified, right? I mean, you've got to attack the pain points in order to make progress. So, on this, in terms of that challenge with finding the right lenders, um, I think personally, there's enough mix out there today that have been around, that have a track record, that have loose enough guidelines that you shouldn't really need to go beyond those types of lenders into the real private stuff where you might have one investor going on title, and you're doing both sides. You're doing the investor disclosure. You know, I think if you've been doing that for 20 years, sure, keep doing it. But for most of us, I think you want to stick with this sort of more regulated institutional space. Make it easier on yourself. Don't look at every deal as as just a fee. Just keep it something to churn through the pipeline. Something that like I said, you're confident in. Your client. They're going to close. You're going to keep your client happy. You're going to make your compliance side of your life easier. So that's one thing. And I think also if you can, sort of going back to Connect or where we're going with Connect is not having to pass on deals that seem too hard, right? So it's just going to be about finding a way to work on harder deals in an easier fashion. And then better communicating, the value proposition that you bring as a broker to your client, right? So those things we just talked about, being quicker, getting those options before the client even has a chance to go think about calling a second broker, and then presenting them all the options and explaining why they are what they are and the pros and cons of each, and weighing them and really having a discussion with your client, and not saying, look, you want a second mortgage, these are the terms. It's like, well, no, maybe there's enough money out there where you do have a little bit of leverage to negotiate. If you need this one to be open after 6 months because you want to refi them or whatever, that it's okay to ask for those things, and you can get them done now because the lenders are so hungry for deals.
Yeah. How many clients would typically engage a second broker or multiple brokers, do you think?
I mean, it would just be pure conjecture, I think, but probably around 50. But I think I like to operate on the assumption that they all are. Because
True enough, right? You don't want to be comfortable.
Yeah, you don't want to be comfortable, and you want to, whatever that's my mindset to kind of motivate me to make sure that I'm providing them the right service, right? So I don't want to give them the chance to, and I even if they haven't, if I drop the ball, then they likely will, right? So
yeah, and I guess in this world of technology, everybody feels like an expert now. So if they go out and find deals out there or rates on the internet, that everybody thinks that that's the deal that they should be getting.
Yeah, and that's a problem that brokers, are dealing with on a daily basis, whether they're doing A's or B's or C's, right? So it comes down to, just understanding the nuances of the space, the regulations, different lending guidelines, and being able to actually explain to the client why you're, steering them through this particular route as opposed to another. The stuff they see online is generally the most cookie cutter. As we all know, the actual deals that we're doing are kind of the furthest thing from that. So
yeah, which actually brings up another point. So if so thriving in this private space, we shouldn't be passing on deals, but we know that these deals are typically unique. They're not cookie cutter, further away from the cookie cutter situation. Probably a difficult issue, right? Whether it be an income or maybe it's a property issue or valuation issue. So I would imagine that a lot of our listeners are thinking, well, if everything's different, and I know some lenders deal with a certain type of deal and other lenders deal with other types of deals, this could potentially be a very difficult proposition, right? Because if I'm going out and saying, okay, I'm going to take this one, and I don't know which customers are coming or clients are coming through my door. This one has an income issue. Okay, well, I'm going to take it to this particular lender that deals in these types of situations. But then I've got other ones where they're, tough, different situations. But I may not have those people in my network. So maybe we should hold on to this question because, or unless you want to sort of
Yeah, no,
talk about it.
I mean, I think we'll kind of get to how Connect helps in that aspect. But yeah, I mean, my mindset, I hate losing deals. I think everybody does. And I hate saying no to a deal in the first place because I always believe that the same way there's always going to be a second broker in the picture. I think in 99.9% of the cases where a client calls me, even if I think I can't get their deal done, they're probably going to get it done somewhere else. It may not be a good deal for them. In fact, it very likely won't be, but they will get something done, right? So you want to be able to kind of take down as much of the deal flow that's coming through your door.
Right. Cool. All right. So we've talked about how to thrive in the private space. Let's talk a bit about Connect. So this is this platform that, well, we'll get into it in a little bit, but it's going to help you work smarter, not harder, and it'll address a lot of the issues that we've seen in this space.
Yeah, so my role with Connect has sort of been to help out on thinking through the product, figuring out what is from the broker's perspective going to make life easier, and really drawing on that experience I had where I was running a large team that was doing a lot of volume on the private side. So at its core, what Connect does is it allows you to very simply create an application. We stripped out a lot of what's kind of fluff as far as the private side goes, that you would find on the standard application, and then we've created a platform with a wide diversity of lenders, a growing number of lenders, where one simple upload of the application is going to be able to generate you multiple offers right off the bat. So instead of having to send 5 or 6 different emails to get 5 or 6 different quotes, you upload one application, and if it fits in 10 different lenders' lending guidelines, they're going to be prompted to offer a quote on the deal. They are actively reviewing the deal. We've made it easier for them on that side. They have a deal room, so any documents that you upload, they're able to access right there in the application. They're not having to follow up with you for this or that. And then they're able to just tell you what their pricing is right away. So you get an instant snapshot of the market for your particular deal, as opposed to, a generic, well, seconds are 10 and 2, but yours is actually 14 and 5 because of X, Y, and Z. No, you're going to know right off the bat what your options are for that client. You're going to get those responses really quickly, and you're going to be able to have that conversation with them then and say, look, in parentheses, you don't need to go anywhere else because I've got the whole market for you right here for this deal.
Wow. So you had given me this this little process here. So I think you've kind of chatted through this. So maybe walk us through this.
Yeah. So I mean, the lender is going to set up their lending criteria. I think we've got right now over $750 million in available lending capital on the platform, and I think we will probably be announcing some other big lenders coming on board in the next couple of weeks, where that'll take us over $1 billion. So again, like I said, there's broad coverage. Now you're going to upload your deal. Connect is going to, using its AI, it's going to notify every lender with whom it's a fit that they have a new deal pending. They're going to review it. They're going to have access to all the documents that you've uploaded, and they're going to be able to very simply just issue a quote or the sort of terms through the platform. So you're going to get a notification saying, I've got 5 approvals on this deal. Here's the pricing on each of them. And then you're going to know, okay, you're going to be able to have the conversation with the client, figure out where you're going to go. And then you go back to the lender and say, hey, I'm going to do this deal with you. Everyone else will get notified, and kind of away you go. So the Connect, the role it plays in the deal is sort of application to acceptance. Anything beyond that, is going to be done sort of offline. But the biggest pain point, as we've kind of been talking about, is like, who do you work with? Mm-hmm. How do you make sure you're getting the right options? And that's exactly what kind of Connect is addressing.
Right. Cool. So this slide here, I think, is more addressed towards the lender. But really, if you look at number one, prior to that lending criteria, or maybe in parallel, the broker will enter their deal. They can upload their documents, and then simultaneously, the lender who has lending criteria, we sort of converge at number two now, where their Connect platform is scraping through their lending criteria and then sending push notifications out to lenders so that they know in real time what is available out there. So I know from my perspective, I see deals coming in and I get instant notification, within the minute, I would think. So the net of this is it automates all the stuff that creates all the work and churn through this.
Yeah, so it's really nice. Like those push notifications are kind of key, as well as the fact that the deal is vetted when it gets to the lender. So that's what enables you to get a really quick turnaround. So I've done a few deals on the platform. I think you might have a slide on one or two of them.
Yeah, right here actually.
Yeah, perfect. But so I mean, kind of leave that up there and people can read through it. You can see the challenges with each. A first to 80% in Windsor is, Windsor's hard to do on the A side sometimes. So a first to 80 on the private side is definitely hard. And then you've got the grow up mold remediation, also the heritage property. That was one that, part of me thought, let's, maybe walk away from this one. But I was actually able to get 4 different offers on it, and you can see they were within the same day. So
amazing.
When I just uploaded that once, and I think that was one of the first deals that I did on the platform, and it was probably the most satisfying because, like I said, I almost threw it up there thinking, we'll see what happens. But I'd almost kind of written it off in my head, and then that same day I got back an offer. So what's cool is, the lender is when they get notified of a deal, they already know it's going to fit. So then it's just, it's not to say they're necessarily going to approve it. They might not, maybe they've seen that client in the past, or maybe the property is near a hydro corridor that, some nitpicky thing, which is fine, it's going to happen. But barring those circumstances, they're going to be able to just offer terms right away, and you're going to be able to go back to your client with that.
Yeah, you're able to. It's not the round peg square hole anymore. It's round peg round hole.
Right.
So that due diligence aside, we're going to the right people right away.
Mm-hmm. Yeah,
excellent.
Absolutely.
Let's see here. So registration, it looks like it's pretty easy, right? Just Tom Brady. It's good to see that he's doing something.
Yeah, post-retirement.
Yeah. So just a quick. Oh, and I see here that down here on the second slide here, you've got to enter your agent number or broker number. Right?
Yeah.
Brokerage name.
Yeah. So I mean, obviously, security is going to be paramount with anything in the mortgage industry, but particularly a platform like this where you are sharing information. So on the broker side, obviously you're going to need to be fully licensed, everything in good standing. We do manually verify those licenses, and we do random audits as well to make sure everyone's in good standing. On the lender side, it's even a little bit more robust because again, if you can't come to Connect and find a trustworthy lender, then I don't know where you can go. So we really prioritize having reputable lenders on the platform. Again, kind of going back to the mixed space, the mutual fund trust, some of the larger and institutional private money is what you're going to find here. And with the demand for private deals today, those are more than sufficient to cover all your needs. You might not do the 90, if that grow up heritage home was at 95% LTV, maybe that one would be a pass. But for the most part, you're going to be able to take down everything.
Yeah. Cool. Okay. So why don't we do a quick demo for people? just really quick to show where we are, where we are at here. Now, I know our developers are working on a couple things here, so
They're always working on something.
they're
Right?
always working on something, right?
Yeah, so it's a very simple app. If you've done any deal input on Filogix before, this is going to be a dream. It's basically you're going to, you pick your property type, put your address in, and we'll say
Oh, and it autofills.
it
Okay.
autofills it. Owner occupied, we'll keep it simple. Say 3,000 square feet. Put their name in. Do Tom Brady again. Sorry. We'll say this is a refi. He's a non-resident.
Non-residents.
Presumably he's got good credit. We don't need ratios doing private. He doesn't have a first because it's Tom Brady, makes a lot of money. But maybe he's looking for one for some reason. He's going to do some renovations, so he wants 500 grand
For 1 year.
for renovations.
Okay.
I will say the property is worth $1 million.
New trophy cabinet, maybe.
Yeah, there you go. Let's say we got an appraisal. No other properties. We're looking for 50% LTV. And we want to close end of the month. So this is one of the really cool features. I can just upload documents right into the deal. So this isn't Tom Brady's appraisal, obviously, but so we got the appraisal here. I can just add another one. So the lender's going to get the access to these automatically, so I don't have to email them. I can put in as many or as few as I like. So we'll do app credit and appraisal. We've got this feature where you can actually identify what they are. You should have pretty much everything that you might need here, but you've always got the other. And then you've got your deal notes. So Tom is looking to build a new trophy cabinet. Obviously,
Blah, blah, blah.
obviously you want to say more than that, but
Yeah.
And then there you go. You post a deal.
Now, if I want to, so this is going to go out to the entire network. I guess I can. I think I saw something there where I can share to particular lenders directly if I want.
Yeah, so this one that I just did, I sent out to the whole network. But what you can do is you can use this share function. And so if, let's say, say it's a client that I've done a bunch of different rental properties with, and we always use the same lender and they have a good relationship and I want to go back to that lender, I can just easily pick them. And instead of going to the marketplace where you're going to be getting a broad base of quotes, you're just going to, that lender is going to get notified, hey, here's the deal. Maybe I called them beforehand. We talked about it. I was like, okay, well, I'm going to send it in. This is how I send it in. So
Excellent.
Yeah. These are just some of the deals here. So then I would basically just be waiting to get my approval back on Tom.
Right.
And once I got something from the lender or some quotes, then they would pop up here in my negotiations. It's just
so some of them are where you've declined it or accepted, right? So as deals come in, then I, as the broker, have the option of either saying, yeah, I like this deal, let's move forward,
mm-hmm.
or
generally you're going to get more than one offer. So you are going to have to decline a few.
It's quite the luxury.
Yeah. So it's automated. So if I accept, your offer, then whatever other lenders there were, they're going to get notified. Hey, this other offer was accepted. And if for whatever reason you're not able to, the deal falls through somehow in due diligence, then I can easily just reactivate it. And those other lenders who initially made their offer are going to get notified again and say, hey, this one's live again. And I can, easily go back to them.
Cool.
So, yeah, this is just on the demo side. So I'm not expecting to get an actual offer back here, but that, I think it took less than a minute. This is what it looks like. So, you've got the map here showing the property. So this is what the lender's going to see, basically. They've got the info that I input, property details, borrower, deal, so they can look at the documents here. They can download the appraisal, and they can look at it. And then they've got the broker details. So we're in your demo account. Oh, sorry. We're in your demo account here, so they're going to see my my contact info. They can get in touch with me if they have any other questions or anything. But yeah, pretty simple.
Yeah, that's good. Good. So yeah, and then I think what we'll do in the future is go through the lender side, just so that lenders or even brokers who are interested to see what the lenders are seeing, we can go through that. And certainly, if you're interested, those who are on the line, if you're interested in getting a more detailed run through on this, we'd be happy to take you through this. Okay, so let's just quickly go through this here. So I think you've kind of gone through these as a summary, or sorry, through the presentation. But maybe if you could just run through that.
Yeah, sure. I mean, fast and easy is the key in this business, and I think 5 minutes is a stretch, as you saw. It took 1 minute because I was making it all up, but maybe it'll take you 2 if you actually know the details. You're going to get a quick turnaround. We've got our one thing I've noticed in dealing with some of the lenders that we have is that they're hungry. They're all hungry for deals. So, they're waiting for those notifications. They love the fact that when they get a notification, they know it's a deal that they can do. Yep. So it's saving them a ton of time too, and that's part of the value proposition that we have when we're bringing them on board. Is they're not sorting through a bunch of weeds to find the flower. They're just getting what they want, and that's why we're getting quotes so quickly. And again, I mean, Connect is doing that hard work for you, right? You're not having to go through your Rolodex and your spreadsheets and figure out, okay, this guy does 30 minutes north of the GTA, but this one on Google Maps says it's 36. So let me email and ask if that's okay. That's all taken care of for you. You got a ton of lenders on there where, we talked about, the coverage that we have from the groups that we have on board already, and we're always bringing on new lenders. So, whether it's a first, second, third, small commercial, construction, we've seen them all, we've done them all, and like I said, I mean, it's just, at the end of the day, it's just about appetite. There's so much capital out there. So if you've got a deal, we'll be able to do it. And then confidence. I mean, we kind of touched on that a lot, but you're not getting, the third tier lenders here. You're getting the top tier private guys where, you can be fully confident that your working relationship's going to be good. They're going to come through on what they said, and your clients aren't going to get messed around with. They'll be treated fairly as they should, because they're dealing with properly regulated entities. And this is a big one that we didn't touch on actually, but Connect's not a brokerage, not a brokerage in any way, just totally a technology platform. So there's no extra success fees or broker fees or anything like that that's added to your deal. You charge whatever you want to charge. That's done offline. We're just a simple subscription fee. Just not a co-broker, no fee splits. I mean, I think that's a big one, especially when you look at what's out there in the market. It's a pretty compelling reason to use the software.
Yeah, that's great. Good. So, we're near the end of the presentation. We'll be going through your questions, and I see that there are a number of them that we've received through the presentation. But really, private deals shouldn't scare anyone, is what I'm hearing as a takeaway. If there is an ability to increase the number of intakes that you get, the better for you, and especially if you can deal with those confidently. Mm-hmm. Private deals done well increase your commissions, because if you're, what's the typical commission on an A deal? 80 basis points maybe.
Yeah, 80 to 100.
Right. So you're going to be instantly improving your profitability. And if you've got an ability to effectively manage these, you're gonna do yourself and your pocketbook a big favor.
100%.
More transparency and choices increases your client satisfaction. So I heard that you said, we need to get through these fast and we need to give them choice. In a lot of cases, transparency is not there, but this tool will help you improve that, give you those many choices virtually instantly. So it keeps
I would say it's client satisfaction, but it's also broker satisfaction. I mean, it's just thinking back to those deals that we showed. I mean, it was a huge sigh of relief to upload that deal that part of me wanted to walk away from, and suddenly I have 4 commitments. I was like, it was amazing.
Yeah, cool. And then happy and satisfied clients equals
more referrals.
More referrals.
Yeah.
Brokers will also be extremely happy through this. Okay, so let's go through some questions here. Let's see here. So, hi there. Was just introduced to Connect, but really enjoyed the presentation. Honestly, I normally say that they normally say no to deals that look like they're private deals because they're not sure who to take it to. Connect sounds so easy, maybe too easy. Is it too good to be true? Are you saying that every lender on your platform that has a lending criteria that matches my deal will actually see my deal? So a lot to decompress there, but essentially what one of our attendees is saying is, if I post a deal, somebody's going to see it as long as it matches their criteria.
If it matches, yeah.
Right.
So that doesn't mean you're going to get an approval from them. It's not. We're not approving, or Connect's not approving any deals for anybody. We're packaging it up for them and vetting it so that they know, okay, I can look at this. This is something that I should be able to do. And then once they've taken that look at it, they can say, okay, I like this. Here are my terms. And we've made it easy on their end, easier than it is to even upload the deal. As easy as that was, they can just issue their pricing. So they're not sending out a full commitment at the sort of initial approval stage. They're just giving you their pricing and any particular terms that they might be relevant to the deal.
Cool. Okay. Here's another one here. Do you let private individuals on the platform? I think we kind of talked about that, but maybe you can just sort of elaborate on that.
Yeah. I mean, no, we don't. Every lender is, in one way or another, a FSCO regulated or FSRA regulated or entity. So basically mix. I mean, there's a mutual fund trust. No, we're not doing any individuals. I mean, like I touched on a few times, I mean, the compliance is a headache, and there's no need for them really, right? I mean, there's like I said, there's so much demand even amongst the mix. Like, they need to get money out there. So anything, you should be able to get pretty much anything done with the coverage that we have. It's pretty extensive, and it is growing all the time. I mean, the goal is to have a substantial percentage of all the mix across the country on board within a couple, let's say, the next 2 quarters.
Right, and right now we're Connect is at about 750 million, $750 million of sort of available funding. So theoretically, there's no deal that won't match somebody. Yeah,
I mean, I would hedge that a little bit, right? There's no 100% LTVs or anything ridiculous, but any reasonable deal is definitely gonna get something.
Right.
Yeah.
It says your grow up heritage property.
Yeah.
Right. Good. Okay. And then it looks like the last question: is there a limit to how many deals I can post on the Connect platform? Good question.
Yeah, no, that's a good question. No, it's that's one of the beauties of the subscription model as well. I mean, if you do 50 deals a month, then you're paying the same as if you do 10 deals a month. We're not tied into we're not tied into we're there to make you more successful, right? Help you do more deals and not eat into your bottom line in doing so, I guess.
Right. Good. Okay. Well, we want to give you back a few minutes of your time. I appreciate you taking the time today. It's a great discussion. Hope you learned a few things. I know I did, as I always do. This concludes our session today. We're going to post a recording of today's session on our site if you'd like to review or re-review anything. But if you have further questions, please, or want to get in touch, please reach out. Our URL is connect.com, KNNCT.com. And you can reach out to me directly as well at mikes@connect.com. And I'll be happy to answer your questions or take in your feedback. We're always adapting here at Connect and love to get your feedback and suggestions. So without further ado, we're going to sign off here. Thanks again and enjoy the rest of your day.
Yeah.
Take care, guys.
Thanks, Mike.
Good job.